Hey guys, good morning. Oh, it's afternoon. 12:46 p.m. We begin our class. So I hope guys you're ready for today's class. So give me like 2 minutes, let me know 1 minute. Let me set up my system. What we are supposed to do today. So give me a minute. Uh, so just a minute, guys. 1, 2. That's fine, yeah. So last time we did a lot. You can remember. So a minute, learn. So we are ready. So Chris Joshua, welcome guys. So today I won't be doing much. We'll just do a little recap of what we did last time. And then we are going to start margin trading. So I hope guys you're ready to link for us to get started. Last time we did why we trade forex. Now today I'll introduce you guys to margin. What is margin trading? And also I'm going to show you with an account here.
Give me logbooks. Just one.
Okay. No worries. No worries. So I think we are ready. So you can ask your questions. This is an interactive class.
Hello, how are you? Yes, my name is Philip.
So experiencing echo. What about now? I can use my earphones. Minute, guys. So a minute, guys. Oh yeah. Yes. Am I audible? Just text down here. Tell. Am I audible? Just text down here. Tell me. You can hear me now. So just mute your microphones. So I think we can begin now. So my audible enough. So let's begin our lesson. Our lesson today will be on margin trading. So let me share my screen. Awesome. Thank you, guys. Yeah, just respond to me if I'm not audible, I'm not clear enough. So that at least we can learn something. So today I'll be introducing you guys. Let me share my screen. Yeah, it's there. Let's share. It's there. So there we are. So I'm going to touch more on margin trading and how you basically. Okay. Sorry guys, this is work. Okay, let's begin. So it won't take much time, maybe 30 minutes maximum. So let's see what we are going to do for today. So last time we talked about economies, we touched on a little bit of technical analysis. So my chart is here. We touched on Euro USD, and we drew a little bit of support and resistance. And I think let me use this as H4. So I was able to show guys how basically support works and how we are able to read a trend. So for today, I won't touch much. So let me first start on margin. What is margin? So the biggest appeal to most of the Forex traders or most of the guys coming on board on Forex is margin. So I need us to understand what margin is all about and what it is. So let's look at it. So we are just going to go through it. Minute. So margin basically trading gives you the ability to enter positions that are larger than your account balance. So when you come to Forex, you look at leverage. There's something we usually call leverage. So most of the account opening, you look at leverage, maybe 1:200, 1:400, and the like, and the like, and the like. So with a little bit of cash, you can always open a much bigger trade in the Forex market. So, and this is with just a small change in price, of course, in your favor, you'll have the possibility of ending up with massive. But most of the new traders, because they usually don't know what they are doing, of course, most of the time you realize price will go against them. So, minutes. I think we are good. So a minute, guys, there. So I was saying, so most likely you realize price will move against them. So why would price move against them? It's because they do not understand what really is working. So sorry, guys, I think I'm having issues with this internet. So a minute, guys, I have these on the right side. So one second, guys. So I think so a minute, guys. So sorry, guys, my system is a little bit misbehaving. So just a minute. Okay. I think we are good to go now. So, okay, we are back. So I was talking about margin. So it's basically where you can be able to enter a big, you have small amount in your account, but you can enter larger positions than your account balance. So maybe you have 500 or $1,000, but because of leverage, you're given more. That means you can be able to make more with your account with a smaller amount. So for example, this is an example I was giving out. And then the small change in price moving in your favor, you have the possibility of ending up with huge profits. And of course, if the price goes against you, you can make. So, so let's move on. Let's move on. Let's see what margin is all about. So we are going to look at what's a margin call, what's a stop out. If you don't understand how margin works, it's basically what Forex is all about. So this is an example. So you'll have an account that looks like this. So this is 1,000 euros. And you'll see the equity here at the center. You'll see the margin. And then you'll see the free margin. Then you'll see the margin level. So this is all I'm going to explain today. Wherever you're seeing here, when you open your account, when you're on MT4, or you're using your account, this is what I'm trying to explain, what the balance is, what the equity is, what the margin is, what the free margin, and what this margin level represents. So welcome, I'm seeing more guys. So if you really understand how margin works or how it's used in Forex trading, you need to know how your margin. So if you understand margin, one big challenge most traders face is they don't understand how margin works. For example, let me give an example. You have a $2,000 account, or this is 1,000 euros. So for you to risk or enter positions on this $1,000, 1,000 euro account, you need to understand how this margin operates. So this is what I'm going to explain to you. So this starts with understanding some really important numbers. So this is how they are interrelated. So we have equity, we have balance, we have used margin, we have free margin, we have unrealized P&L, and we have margin level. So this is what mostly I'm going to be dealing. This is what I'm going to be revolving around this equity, balance, margin level, and realized P&L, used margin, and free margin. So you have to understand the relationship between them. So before you enter any single trade on the live account, you really need to understand how they really operate. So let's give for example. So we have balance. What is balance? When you deposit that amount in your brokerage account or in your account, what does that balance stand for? What does it mean? So what is used margin? What is free margin? What is unrealized P&L? what is equity and what is margin level. So these are the things I'll be touching on for today. So it's more of technical, because now, at least with this class, you guys, we have begun more on the technical analysis. So this is another example. Look at it. I think I had showed you this one, 1,000, the equity margin. So this is what I'll be explaining, because this is what mostly you'll be seeing in your account. When you open an account, what this size means, what this type is, the time, and of course the order type. Of course you see an order here and also the symbol. So let's have a look. So let's start with account balance. What is account balance? So let's have a look at what account balance is. So this basically is how much you're having in your account. So that's basically what account balance is. So you can see this is another example. There's available to trade, net equity, cash, and realized P&L. This is what is running total margin. So let me go into detail. Sorry guys, my internet is a bit lagging today. I don't know why. So a minute. So it's opening. So it won't take much time, or account balance. So basically, this new account should be funded with risk capital. So their clients have been talking with, and they're like, what's my risk in the business? So there has to always be a risk, of course. If you do not risk money, or if you do not risk anything in this life, you really won't get anything. So this is cash I can afford to lose. So with an example of that 1,000, if I'm risking, so let me show you with the MT4. So say I have 1,000, this is my MT4. Say I have 1,000 balance here. So this is just a trial. So so this is just a trial. So if I have 1,000 running, so I need to show you this. Okay, so today's introduction, but by coming class, that is on Thursday, I'll be doing a live presentation. So I hope you guys will be ready. But today, let me just show you. So this is new order. So this is new order. So if I'm entering a new order here, so you just click on this. This will be your MT4. So for you to enter, you will see volume here. Can you guys see? So this is volume. So if I'm doing 0.01 with $1,000, I'm risking around 1% of the account. If I'm doing 0.02, around 2%, 0.03, around 3%, and so forth and so forth. So there are guys who come on board and have a $2,000 account, but enter with one lot. Okay, the idea is it can be good because you might catch the move and make some good money. But the question is, how much exposure do you have? How much exposure are you risking in the account? So most of the guys never survive within the first 90 days. And the reason is because they don't understand margin. So, and this is what it's all about. So if I have 1,000, I should risk small amount, say 100 or $50. So if I'm doing 0.01 or 0.02, I'm risking money I can afford to lose. So basically the account balance, or simply balance, the starting balance of your account. Basically, it's the amount of cash in your account. So balance is just the cash. So if you deposit 1,000, then of course your balance will be $1,000. So balance is basically what you have in your account. So if you enter a new trade, or basically open a new position, your account balance is not affected until you close that trade. So this means that your balance will only change in one difference: when you add more funds, when you close a position, and when you keep a position open overnight. So if you keep a position open overnight, we call it a swap or rollover fee. So I hope guys you're following. So you call it a swap or rollover fee. So minute guys. So since the topic is about margin, the concept of swap and rollover aren't really related, but minutes, let me add her. We'll quickly describe the fees and what it affects in your balance. So let's continue. So most of the brokers will perform basically a rollover automatically by closing any positions at the end of the day. So if you close, you'll have a swap. So let me guys show you what's a swap. Let me open this account of mine. I think I have the history, so that at least you have a rough idea. So account history, so all history. So this is my account history, guys. I hope you can see. So I had 10,000 here. So I think you can see I was making some good progress. I think I made almost, let's see how much money I made on this account. But it's a trial, so I was just testing my system. So you can see swap. This is what I wanted you guys to see. Look at this. This is swap. You can see here there's minus 11. Here there's minus 2, minus 1. Sometimes it might be negative. Sometimes it might be positive, like this one. You can see this was USD MXN. This was minus 11 swap. I had a minus 303, like that, like that. Oh, I made a good amount on BTC. So this was some time back. You can also see the date. You can see the order. You can see the time. You can see it was a buy. This was the size 0.2, and this is the profit, and this is the swap. So let's see. So then cumulatively, you'll see down here, it has been added up. So let's go down, 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 up to here. So you can see, so this it was cancelled, but I think I made, oh, there was a profit. So you can see I made around $1639. So, but it was a trial, so that's why this amount had to be withdrawn. But you can see the swaps here. So the swap here, whatever I'm showing you, this is the basically the rollover. You can see some are positive and some are negative. So I just wanted to explain to you, the swap is the rollover fee. This is a swap is a fee that is either paid or charged to you at the end of each trading day, if you keep your trade overnight. So if you are paid swap, cash will be added to your balance. If you're charged swap, cash will be deducted from your balance. So unless you're trading huge position sizes, these swap fees are usually small but can add up over time. So let's have a look. So this is it, 0.01. So profit, and then this is how it looks like. So whatever I'll be explaining, so I'll have these, let me save this image with me, because this is what I'll be using. So minute. So this is the swap. So this is what, it's either charged or it's either deducted to your balance. So what is unrealized P&L and floating P&L? So when you open a trade, you'll see trades running like here. Can you guys see? These are trades running. This is unrealized P&L. So let's go to, so let me save this picture a minute, guys. So if you have a question, you can always raise your hand or just ask. Just leave me a message here as I'm continuing. So let me save this. So this one I've saved. So let's go to what is unrealized P&L, or we call it floating P&L. What is it all about? So let's have a look. Okay, a minute. So unrealized P&L, it's basically the running trades. They are not realized. That is mean we don't know if you have made a profit or a loss yet. So that's why we call them unrealized P&L. P&L stands for profit or loss. Floating means just the way you can understand something that is floating. Basically, we have not closed the trade. So basically what is happening is that the trades are running. They have not been realized, or basically they have not been closed. So let's have a look. So minute guys. So this is it. In your trading platform, you'll see something that says unrealized P&L or floating P&L with green or red numbers. So in this lesson, we'll explain what they are. So when trading, there are usually two different types of profit or loss, also known as P&L. Both are important. Let's discuss the difference between the two. So unrealized P&L will refer to the profit or loss. Basically, the profit or loss held in your current open positions. So you are actively trading. You can see trades running. So that is what we are calling unrealized P&L. This is equal to the profit or loss that will be realized if all your open positions were closed immediately. Welcome, Hosea. So this is equally to the profit or loss that would be realized if all your position. So I think you can hear me now. I think I'm more audible, guys. So let's continue. Yeah. So this is equal to the floating P&L. So when your trades are running, you have not closed them. They might be running in profit, or they might be running in negative. So what it's all about is they are floating, they have not been realized. So this is an example. So let's have an example. So let's say your account is in USD and you are currently long. Going long is buying. So let me go back to my MT4 again. So this is, for example, going long. If I click this buy, I'm going long. If I click this sell, I'm going short. So you can see the difference. You can either use this or you can use this one. This one here, written new order. If you also press F9, you'll be able to see it. So most of these I'll be doing it practically. So floating position times current price minus entry price. So floating, for example, is 10,000 times that price minus this. And of course, your position is down 200 pips. So this is a little math. So you currently have a floating loss of $200. That's 200 pips times 1. So this is your account balance. So we have $1,000. So if the P&L is running minus 200, of course, our floating P&L will be red or minus 200. If you are having plus or the money is in profit, we'll be having the floating plus the balance. But remember, it's until it's realized that we'll be able to know that this is profit or loss. So basically, usually when a loss remains floating, you are hoping that the price will turn around. So there are guys who do swing trading or position trading. They can hold trades either on negative or positive. So the position will be up now 100 pips. So since you're trading mini lot, each pip will be worth $1. So currently your floating profit will be 100. So this is how it will look like. So your realized P&L now is once you have closed any of the trade. So this is a profit that will come from a completed trade. Same thing with a loss. Realized loss is a loss that comes from a completed trade. In other words, your profit or losses only become realized when the position are closed. So like these ones are already realized. I think I've shown you this example. So these ones are realized. So like this one, you can see there's a profit 1639 here. This is already realized. So you can see profit or loss. So if I made a loss, this should be negative. But since I was making a profit here, you have seen at least I have around 1639 there. So this is just for explanation purposes. So this is only time when your account balance will change to reflect any gains or losses. So your account balance will move whether you make profit or loss, which will be added or deducted. So this is another example of realized loss. So I don't need to go to the math much. So I'm just giving you the explanations so that at least now we'll be starting to do it practically. So minute, guys. So we have talked of realized P&L. So if you have realized profit, of course, yeah. So this is a good example. So look, our balance was $1,000. And then our floating P&L, if we realize 200 loss, our balance afterward will go minus 200. So you see it will be 800. If we made a profit, of course, now have plus, this would be have been 1200. So realized profit is the same thing. So guys, you can see. So now we have a profit of $100. This was our balance. And of course, now after we close or after we realize the P&L here, we'll have 1,100. So profit isn't real until it's realized. So I need you guys to understand profit is not real until it's realized. So the difference between realized and unrealized profit is subtle, but they mean the difference between a profitable trade or a losing trade. It is important for traders to clearly know how to differentiate between realized P&L and unrealized P&L. Realized profits are gains that have been converted into cash and added to your account balance. So basically, that's what profit is all about. That's what we are all about here. So let's continue. We are almost there. So realized losses, sometimes there are guys who will come in the market and you might experience a loss, especially if you're new and don't have enough guidance. you might realize a loss. So realized losses are losses that have been converted into cash. Sorry, almost converted into cash and deducted from your account balance. In other words, you do not realize profits from a trade you've made. You must receive cash and not simply observe the value of your trade increasing. So unrealized profit is theoretical profit or paper profit currently available, but could be taken away any moment. So I think for that one, you have understood when you make a profit and when you make a loss, what happens. So basically, let's recap what we've been doing. Unrealized P&L or floating P&L refers to the profit or loss held in your open position. So we'll be doing this practically. So today will be a bit theory because I want to come with a live account. I don't have it yet, but I'll be having it on Thursday. So guys, I hope to see you guys on Thursday because we'll be doing a live session, or basically I'll be showing you all this margin, how it works practically. So let's go to understand what really margin is. We have understood unrealized P&L and realized. So we have said unrealized is what is floating, what's running. Realized is what you have closed, either profit or loss. So now let's go to see what margin is. So that now we understand how the account really operates. So, okay. So give me a minute. So this is margin. So I'll be doing this practically on Thursday, but you can see what margin is it. So you're only required to put a small amount of capital to open and maintain a position. This capital, so if you open a position, for us to maintain that position, that is what we call margin. Guys, I need you to understand this very clearly. So we have capital and we have put say $500 or $1,000. This is an example. We want to buy 100,000 worth of USDN. You don't need to put up the full amount. You only need a portion like 3,000. So margin is usually thought as good faith deposit or collateral that's needed to open a position and keep it open. So for that trade to keep running, if you see those trades running, there is something called margin that is able to hold the trades, or the trades for them to keep running is basically what we call margin. So margin is simply a portion of your funds that your forex broker sets aside from your account balance to keep your trade open and to ensure that you can cover the potential loss of the trade. So we have required margin, we have position size. So this position is used or locked up during the duration of a specific trade. So that's why I was telling you guys, if you risk small, say 0.01 or 0.02, you will always have enough margin to run in your account. So basically, you'll have more opportunity to enter more margin. So what's the margin requirement? This is the percentage. I think I'll be showing you this. It's a percentage you'll see, also known as the notional value. So depending on the currency pairs and forex broker, the amount of margin to position will usually vary. So you can look at Euro USD, for example, 2%, Pound USD, USD, Japanese yen, and Euro AUD. So depending on how much the margin requirement is. So we have something else called required margin. So what is required margin is also known as deposit entry margin or initial margin. So I want to go to these examples because I'll be doing the examples on Thursday. So we'll follow up. So since USD is the base currency, the mini lot is 10,000, which means the position's notional value is 10,000. So assuming, for example, your trading account is denominated in USD, since the margin requirement is 4%, the required margin will be 400. So you just do 4% of this amount. So if I say 2%, I'm doing 200. 2% of this, $10,000. So, but most of these I'll be doing it. So this is another example. The GBP is the base value. This mini lot is 10,000 pounds, which means, assuming your trading account is denominated USD and your requirement is 5%. So you do 5% of 13,000, and this is why you're getting the required margin as 650. So I won't go to another example. So let's go to the next thing because, yeah, so let's recap again. So margin requirement is the amount of margin required to open a position and is expressed in terms of percentage. And then required margin is the amount of money set aside. So there's an amount that will be set aside or locked up for you to run that trade when you open that position. So that is what margin trading is all about. So let's go to used margin. So we also have used margin. So what is used margin? Let's have a look at what used margin is. So 1 minute, guys. So a minute. So used margin usually is the total of all required margin. So you have, say, 5 positions or 10 positions running. So like here, let me give you an example. So I have maybe position this, position this, position this, and maybe position this and this running. So if these positions are all running at the same time, there's something called required margin. Combine and have a total, all of them is what we are having, used margin. So it's here. It's, in order to understand what used margin is, we must first understand what required margin is. So whenever you open a new trade, a specific amount of required margin is set aside. So required margin was discussed. What is margin? So if you open one more position at a time, each position will have its own required margin. So this is what I needed you to understand. So if you open many positions, each will have a specific required margin to run that position. So in all of them now, if you add up all of those positions using that required margin, is what now we are having something called used margin. So at least I hope you are following. So every position has a required margin. If you have all those positions open, the total amount is what we call a used margin. So used margin is the margin that's locked up and can't be used to open new position. So sometimes you might exhaust this used margin in a way that you cannot trade or open new trades. That means you have to close more trades to free up margin. So I believe that's fine. So let's continue to the next. So what is equity? So let's go now to equity. What is equity? So I believe, let me go to my example again. I don't know if this one will show my equity. Oh, this was credit, but equity is usually around this area. This is now what you have running, or is basically the value of your account. So as of course, the floating P&L. So let's look at equity before we call it a day for today. So 2 seconds, guys. Yeah, this is equity. So account equity, you see it on your account there written as equity. It represents the current value of your trading account. So say how you have 500 or $1,000. So that's the value. So it keeps fluctuating with every tick when looking at your trading platform. So it is the sum of all your account balance plus floating in brackets unrealized profits or losses. So if you open a position, you will see those numbers moving. So that is to mean if you are in a profit, of course, the equity goes up. If you're in a loss, of course, the equity will be going down. So as your current trades rise and fall in value, so does your equity. So basically equity is equals to account balance. But if you have, so this is, for example, this is the equity, you have $1,000 here. This is the balance, 1,000 USD. So how do you calculate? It's the account balance plus the floating profits or losses. So that's what equity is all about. So if you have, for example, this is equity equals account balance plus floating profit or losses. So if you have 950 and you have minus 50 profit loss, so of course your equity will be at 950. So I think this is fine. So the difference between balance and equity: balance reflects profits or losses from closed position. Equity reflects the real-time calculation of your profit or loss. So the equity takes into action both open and closed positions. So I think this one is clear. So if your balance is 1,000 and you have an open trade that has a floating of 900, of course your equity will be 900. So let's recap. Equity is the account balance plus the floating profit or loss of all your open trades. So let me go now to the final, because I have less than a minute. So let me just brief you guys. Okay. So guys, you can be asking questions. Minute. So I'll just touch now. I've touched the margin. So let me touch what the free margin is and stop out level. So minute. I told you guys my internet is a bit slow. So, but it's fine. So I've touched on equity. So let me touch on free margin and also stop out. What do you, oh, here. I needed this here. Okay.